Intel stock, Micron Technology, Qualcomm, and even the semiconductor ETF are up over 2%. But what is driving this bullish case for semiconductor companies? Let's take a closer look in today's episode. All right, so I want to say the main culprit or the main reason for the bullishness in semiconductors companies today is Micron Technology. The company just reported earnings yesterday after the market hours, and we can see this stock is up roughly 5.5%. And some of you guys might be confused. Jose, are we talking about the same Micron Technology, ticker MU, the company that reported revenue of $3.7 billion versus $4.1 billion a quarter ago, so roughly a 10% drop? The same company that reported $7.8 billion a year ago, so over a 50% drop on year-over-year revenue growth. Is this the reason why semiconductor companies are up a nice amount today? The same company that's losing billions and billions of dollars, we can see GAAP net loss was $2.3 billion. And then just to add icing to the cake, the same company that reported its next quarter revenue to be down 10% quarter over quarter and 53% year over year. So Jose, you're telling me this is the company that's causing a nice bullish case for semiconductor companies. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. And the answer to this is yes, and it kind of just reminds us that, hey, investors or kind of stock price movement is not on the current metrics, at least for the semiconductor industry, right? It might be different for other industries, but for the semiconductor industry, it seems that, hey, investors don't care about the numbers right now or maybe the next quarter. What they're expecting to see is growth in the long term of things. And we can see that the company CEO mentioned that customer inventories are getting better, and we expect gradual improvements to the industry supply-demand balance, and they remain confident in long-term demand and are investing prudently to preserve their technology and product portfolio competitiveness. So, I mean, right off the bat, the company is telling you that, hey, things were pretty bad, but we expect customer inventories to get a lot better. And the products that Micron develops and produces and sells are memory that go in PCs and other kind of consumer electronics, which is definitely great news for Intel. We can see Intel is up roughly 3.6%. Great news for Qualcomm. The overall stock is up over 2.3%. And just the overall semiconductor ETF, a very popular one, iShares Semiconductor ETF, is up over 2% today. But luckily for us, Micron also gives us an end market highlight where they kind of explain a little bit more of each industries. And this is where the bullish case is coming, in my opinion, for semiconductor companies. So let's start off for data centers. So they believe that their revenue bottomed in the fiscal of Q2, which is really this quarter right now. And they expect data center customer inventories to reach healthy levels by the end of calendar of 2023. So they are expecting, they say this is the bottom, which is great news, right? This is also great news for any other company that provides some form of data center solutions. We did hear from a lot of big players like AMD that maybe Q1 and Q2, the first half of 2023, were going to be weak or data centers before starting growth. It seems like that might come a quarter early, so maybe certain semiconductor companies that are dealing in the data center space are gonna maybe increase guidance a bit because the data center market might be picking up a little bit faster than expected. One of the main driving forces here is obviously artificial intelligence. For the memory side, they do mention that servers today can have up to 8 times the DRAM content of a regular server. So AI servers are definitely a huge growth demand right now, but there's still a very, very small portion of total server selling in the market and for data center solutions, right? Even though we keep hearing about AI and AI solutions, it's still a very, very new market. So that's what they mentioned in the data center space. Luckily for us, during their earnings call, they share a little bit more insight in the industry, and they do mention that the latest generations of server processors from AMD Genoa and Intel Sapphire Rapids require D5 DRAM, and they are saying that servers using these new processors will continue to increase in the second half of calendar year of 2023. So overall, great news for companies like AMD and Intel. Next, let's take a closer look at the PC market. Now they forecast that for the calendar of 2023, PC units to decline by mid-single digit percentage. And although they still are elevated, client customer inventories have improved meaningfully, and they expect the second half of the year to see an increase in demand. So here's another bullish case in the long term of things for the PC and the laptop market, where a lot of semiconductor companies, especially some of the popular names, provide solutions for. Luckily for us, they do mention that this PC unit, even though it's expected to decrease, these are levels last seen in 2019. So we are seeing this over inventory correction of PC unit volume, but this over inventory correction is only bringing us back to levels of 2019. So it's not the worst case for the PC market or for companies in the PC race at the moment. Next, they do talk about graphics, and these are your GPUs. They expect demand in the calendar of second half of 2023 to be stronger than the first half of 2023. So this is great for any company that provides strong solutions in the GPU market. We definitely know some leaders in this channel, so that's great news. Now, fast forwarding into the mobile market, they expect calendar 2023 smartphone units to be down year over year. But they expect mobile customer inventory to improve through calendar of 2023 and expect growth in bit shipments in the second half of the overall year. So again, this is great news. The second half of their fiscal year is actually calendar of quarter 2 and calendar quarter 3. So this is great news for companies like Qualcomm, even companies like Apple who produce mobile devices. So we can see why some of these big tech giants are also up a nice amount. Now, kind of focusing in other industries and kind of the emerging markets, the auto industry for them, revenue grew 5% year over year, and they expect the auto demand growth to continue in the second half. They also say that in the industrial, so robotics and kind of automation, customer inventories are starting to stabilize, and they expect demands to improve in the second half of the year. So we do know that plenty of semiconductor companies that we own, like Qualcomm, again, Internet of Things, AMD, for example, with their Xilinx acquisition, they are also in the industrial and auto market. Those are companies that can benefit with this growth again in the second half. So it does seem like most people believe the bottom to some extent has happened to the semiconductor, at least with the current market conditions. Obviously, things can change pretty quickly, but at least for right now, it does seem like there has been a bottom for semiconductor inventories, and that's great news for a lot of semiconductor companies. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.